Welcome to Galaxy Brains, the weekly podcast from Galaxy Research. Yo, I'm packed with a stack of Bitcoin t-shirts, and I'm back from the tropics to drop the hot hits and funnel the info direct like fiber optics. So stop it and MIA with the Savage team. Holler to my homies, Bitcoin Magazine. They're the real deal, ain't never been fakes. And when we take the deep state, we celebrate a beefsteak. Walking miles in my shoes, I always find a way. Making big bets, taking low rents every day. Hating on the scene, no, I'll always clap back. Yo, shout out to the team making moves at Cash App. You could catch me at the Deuce with Drew and Big T. Pubkey of South Beach, Colin Zav loves me. Snap back to reality, home in the galaxy, killing every fallacy. So haters, come and battle me. As always, I'm your host, Alex Thorne, head of firm-wide research. Thank you for listening to Galaxy Brains. We have a great show for you today. Wow, I was in Miami all week last week for Bitcoin 2023, and I recorded an interview on the Pubkey Bus with Drew Armstrong, founder of Cathedra Bitcoin, and Thomas Pacchia, our friend from Pubkey NYC. It's a great and fun interview about Bitcoin and Bitcoin culture. And of course, now I'm back in New York, and we're going to catch up with our friend Beimnet Abebe from Galaxy Trading, as always, to talk markets and macro. But before we get into all of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes, and note that none of the information contained in this podcast represents investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Going to be a fun show today. If you're not on video watching on YouTube, you might want to check it out. There's going to be some cool footage and stuff from Miami, but let's hop right into the show. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, my friend, great to see you.
Thanks for having me.
So I guess the country and the political complex in the country is bogged down with this debt ceiling debate. Let's just start there quickly. I mean, markets seem kind of pinned, at least in crypto markets, have been pinned for a couple of weeks. Bitcoin at like 26 to 27. Equities they look a little choppy. I've seen some down days. I've seen some flat days. But everyone's just watching this big event, and it currently has no resolution today on Wednesday. Any thought? What are your thoughts on it?
You know, it's another example of dysfunctional government at its finest, partisan politics at its finest, and obviously, leaves folks wanting more out of their representatives, first and foremost. Secondly, I think it's relevant for markets, but it's a lot of noise right now, not that much signal, in the sense that I think the real negotiating is going to be kind of closer to like the actual X date.
Literally up to it.
Right up to it, which I think is going to really be around like June 7th, June 8th, June 9th area.
So not the June 1 that...
Not the June 1 that Yellen is saying is like the absolute...
And June 1 is what, next Thursday?
I think sooner than that, I think, but yeah, it's somewhere around there. Yeah, next Thursday sounds right. So we've got like a week to 2 weeks to officially get something done. I think we will. The question is once we do get something done, what does that mean for markets? And to be honest, right now it's really tough. There are some Fed folks that have been calling for an additional 2 rate hikes this year.
Wow.
At the same time, we have 30 some odd basis points of cuts priced in for this year. So very divergent from what the market is saying.
Yeah.
And there's, some folks that are calling for, Q4 is going to be a really bad recession, hard landing camp.
I saw David Solomon was saying at some CNBC thing, forum out west, he was saying that it's looking pretty clear there'll be some kind of recession, but he said it would be milder, he thought. As of this moment, that was his view.
No, I like the idea of a mild recession.
Back half of the year,
on the Q4. Maybe
but
Q1.
Have we seen any evidence that that's actually starting yet, or it's still in the pure prediction phase?
If you squint.
So you got to squint at the data.
No, I mean, so there's a couple of things. One of the things we like to look at is first-order derivatives of economic data, right? So are initial jobless claims going up at an increasing rate, or are they going up at a decreasing rate? And so things of that nature. And what we're seeing in that context and some of the other sort of broader leading indicators is that there is some weakness in the U.S. economy, right? like, small business sentiment surveys, like the CFO things, manufacturing PMI being sub 50, right, in contraction territory, all of the regional Fed surveys being in deep negative territory, the cost of like supply chain elements and like, all those supply chain metrics that have come down a lot. And generally, like the price of commodities, with the exception of oil recently, right? They've generally been trading lower. And so there are lots of signs that, at least the pace of inflation and the pace of economic recovery and growth is cooling. Mm-hmm. The question is it cooling fast enough to bring inflation down and to alter Fed path and Fed policy in a meaningful way? And so that's the real TBD. But yes, there are cracks.
Got it.
Right? Like you look at mortgage applications, they're down a lot, right? Credit card spending's up and things of that nature. So there are signs, but like to David Solomon's point, like there aren't like a crazy amount of signs right now.
And they're not like deep, scary signs.
They're not. They're not. Like the commercial real estate is like a little scary out there. But again, like there was a commercial real estate portfolio sale that went through the other day at decent levels.
On CRE, like maybe help explain this to me. One thing I know obviously hurt commercial real estate was COVID and work from home, right? And you've heard municipal leaders, for example, Mayor Eric Adams in New York, has pleaded with business to make your employees come back in, right? Because it's not just the real estate; it's the coffee shops and the lunch places.
Everything, yeah.
It's literally the MTA,
subways,
it's
everything.
Taxis. Is that what else is that the main reason work from home is or what were the other factors like?
Oh, no.
Like
it's a fundamental change in workplace behavior by the entirety of the U.S. workforce,
which is work from home, even if just some days.
Correct.
Yeah.
And it's also just like folks' expectations of what they need when they are working, right? In terms of like lounge areas and like sunlight.
So you have to build up like more expensive offices also.
Correct.
Yeah.
Right? Because all of a sudden there's a bunch of real estate that nobody wants. And
and it's older.
Nobody wants the older stuff.
And it's hard
the
to
nice
retrofit,
stuff is
right?
like going cheap because there's so much supply. Right? And so and it costs a lot of money to re-outfit old buildings and make them like new.
I saw also one solution to this has been in some places
residential.
Turning them into residential, but
That'd be nice.
I read this great piece, actually I think it was in the New York Times a couple of weeks ago, about like where that's worked and also what types of buildings that's worked on, and how like a lot of places, including like a lot of Manhattan, is not, you really can't retrofit them.
Yeah.
Right?
Yeah. So it's a huge challenge.
They don't have windows that open, for example.
Correct.
Which you literally need. In residential.
No, like these buildings were not designed to be residential. And so, there is like this looming thing of like go through like downtown Chicago, downtown San Francisco.
Not good.
It's empty.
Yeah.
And like you were saying, the stores and the businesses in the areas are like severely impacted.
New York has to be one of the best positions compared to some of those other cities, though.
I think it's much better than San Francisco.
Yeah,
where they were barely working there to begin with, and now
a lot of at-home tech developers and stuff. Right?
Exactly. And so I actually need to follow up on this, but there was a building that was going up for sale. It was a Salesforce building in San Francisco.
The Salesforce building?
One of them.
Okay, because they have one. I think Salesforce Tower is the largest building there.
Yeah, but there's another one.
The other one
that is going up for auction, and it was like purchased in like 2019 or 2018, something like that. I believe it was like for north of like $200 million, and like it's going for much less than that now.
Wow.
Like I think it's gonna go for like 60 million or something stupid. And on top of that, it like needs like 40 million in additional spending to like get it up to snuff.
Oh wow.
To like release
make
afterwards.
It even usable, really. Yeah.
Right. So it's like, one, and then you have the banking side of things where like, bankers have made loans assuming certain property values,
right,
certain recovery rates.
And they're pretty long duration loans, right?
So depends, but yes.
Yeah.
So it's we'll see what the spillover impacts are.
That's a tough, like pretty long-term question for America in general, right? I mean,
no, absolutely.
Yeah, wow.
And it's a really interesting challenge, and so it's like, is all of downtown and modern America, like, is that ever going to be the same again?
And it's
right?
weird because a lot of young people and young workers, they like to live in cities, but they don't want to go into the office.
Correct.
So it's like that's why that conversion to real residential, if it can be done, is so important if it can be done. But like I said, I read that it in large part cannot be done with the buildings we have right now.
Correct.
And it takes a long time, by the way, to either knock down and rebuild or retrofit. Like these are not small projects.
No, absolutely.
Wow.
But yeah, that's just another sort of, overhang out there. But, we've been talking a lot about the things that are going to impact, folks in Q4. Excess savings are going to come down because of, student loan repayments, current existing high credit card balances and credit card balances that are growing at, historically high interest rates. And so, there's, we just raised interest rates by 500 plus basis points, et cetera. There's going to be a lot of things in Q4 that we need to kind of see happen, and that are going to broadly drive weakness. Yeah.
All right. So in crypto,
yeah,
we've talked about this before, and I think this is probably still the case. If particularly for Bitcoin, I think most people are looking at it from here. Paul Tudor Jones, I think, said a couple weeks ago that he loves Bitcoin. He'll always have some Bitcoin. But right now, when they said, would he buy it now? Right, that like today, Aaron Ross Sorkin asked him on CNBC, and he's like, maybe not right now. Like we had a big run, and who knows? A lot of people are talking about supply dynamics now, right? Because you do have, I will say, you do have the ordinals driven sort of application layer possible expansion on Bitcoin, which is sort of an interesting, maybe that will have an impact on Bitcoin performance this year. But that's one thing, supply. What else are we sort of looking at and are you thinking about when it comes to crypto this year?
Yeah, no, absolutely.
Ethereum staking is a thing. It's up. I mean,
no, absolutely. I mean, just look at the Lido staking statistics. I think we've already restaked the amount that Celsius unstaked.
Yeah, it's all-time high staking right now.
And so I think that's
the queue to enter is 30 plus days now. There's so many people trying to
right.
Bring
So
stake
that's
online.
A huge story. And I mean, if you just look at gas prices over the past couple months, they've been high. People are doing stuff. Maybe it's still memes and dogs, coins and stuff, but people are still doing stuff on chain. So that's constructive. But, for me, generally, what I'm looking for is the macro response in Bitcoin.
Yeah.
Right. This is a year where I think gold is probably going to take out, its highs and make new trend highs as folks realize that, in the hard landing scenario, if these governments and central banks actually achieve their goal of bringing inflation down, right, they're going to bring it down to a level where it's going to force them to re-engage the monetary sort of spigot, right? Yeah. It's wait, we're going to bring inflation down by tanking the economy. What's your response to tanking the economy?
How are you going to stimulate the economy?
You're going to print money again. And so it's eventually you're going to get back to that point, and that's when you should see hard money really perform.
Right.
And that's when I would expect Bitcoin to sort of take its next leg.
Okay, here's a tough question too. And I know that people are of many minds on this. I think the consensus is one way that we know, but debt ceiling. Let's say a default, or not even a default. A default's who knows how this plays, right? But let's just say a 2011 scenario with it gets done, but we get a credit downgrade or something because of it. It's tumultuous. It doesn't end up getting passed perfectly at the end of night, so it's tumultuous. And most people, I think, obviously would say, risk assets perform terribly in that scenario.
Correct.
I think I saw on CNBC.
S&P down 10% plus. Some people will say
more.
It
was down 17% in 2011 leading in, and it was that just on the market's fears about what would happen, and that sort of kicked the politicians into gear to get it done. Isn't there an argument, at least on a fundamental basis, that Bitcoin should perform well in that scenario?
I think it should
theoretically.
Perform, I mean,
it should moon, right? It's a global, decentralized.
Absolutely should moon.
But
I mean, this what people need to realize is that the dollar and treasuries are the denominator for everything.
Right.
Every asset on the planet is measured against dollars and therefore treasuries, right? When you start having doubts about the denominator of what every asset, currency, you name it, is measured off of, Bitcoin should rally, right? Because it should force you to think, what should my denominator really be?
And what is money and all of those questions?
100%.
And it's global, so it's not just Americans, right? I mean, it's
exactly.
like other people losing faith in America or American, the risk-free rate no longer being risk-free.
Correct.
But what do you think that would, let's say?
No, because right now it trades like a risk asset. So people are going to see S&P down 10%. So they're going to be like...
Right, sell everything.
Sell everything.
That isn't gold
However, I do think that there's a lower bound to Bitcoin that, I'd say Bitcoin's going to outperform beta adjusted to S&P.
Yeah.
I would tell you. Because there's Bitcoin trades partly like a risk asset, but also, similar to gold, right?
Right, because there's a lot of holders
that view it that way.
But not enough.
Traders.
And part of that's right, because there's sort of the hodlers and then there's the speculators still.
Yes, exactly.
And it's like
But ultimately, there's no way that a default by the U.S. isn't, in theory, a positive development for Bitcoin.
Right. I mean, you're looking for other denominators, like you said. It's really a story of just, it's been almost 15 years since Bitcoin launched, and it's still just not understood well enough. It really does. I think you and I know, and I think our audience does too, really does have properties that make it attractive in an environment like that. It really is. I was saying this, if you want to go be a prepper and hide in your bunker, right? Okay, you got some gold, but you want to spend that, you're going to have to melt it or use the whole coin or the whole gold bar, and you're going to have to leave your bunker. You have to go meet someone and trade with it. But Bitcoin, you could just send at any time, anywhere.
Yeah.
And it has these monetary policies that do make it interesting and gold-like. So it should work in an environment like that. But is it just not enough people know that? And not enough people think about it that way?
I think it's just a lack of full thought process. I was running a little long, but I actually do think this is an exercise worth talking about.
Yeah.
But basically, right, there's a lot of aspects of Bitcoin where you're like, oh, it's a great asset in this scenario. That's a sub 5 probability event.
Right.
Right. And there's a slew of sub 5% probability events that would make you want to own Bitcoin. Right. We are in the middle of one of them. Right. The U.S. government not paying its obligations.
Right.
Right. In a world where the U.S. government is not paying its obligations. Right. I want to own alternatives. Right. And crypto being, another alternative,
especially one that you can send, right? Real estate's great, but I can't pay you in real estate.
No,
right?
Absolutely.
Gold you can kind of, but it's not
right. And and then it's money confiscation,
the other one we had another one of these, which was any kind of uncertainty in the safety of the banking system. So this year has seen
safety. You don't trust your bank account, right? You lose faith in there are bank runs, right? This is literally you're hitting on these back to back kind of things, but. Again, these are one, you think about it, this is happening in the U.S., right? The same phenomenon is everywhere.
Right.
It's wait, guys, we're other places don't have debt ceilings. They just keep printing money in their own nonsense currencies that continue to devaluate over time.
Right.
Right. And so hyperinflation, right? We're dealing with an inflation crisis in the U.S. right now and abroad. I mean, you look the UK CPI numbers
came in hot.
Right. The money is just not what it's not working the same.
It's not working properly. It's
the inflation is too damn high. And the monetary response is there's a limit to that, right?
Yeah.
You don't want riots on the streets because the economy is tanking and food prices are still soaring.
Yeah.
Right. And so you are hitting on all of these stress scenarios where if you were thinking back 2 years ago, 3 years ago, or at any point in time, you're what are some of the tail scenarios that should mean that Bitcoin's got more value? And you're hitting on so many of them.
Yeah.
And so that's why for me even though I see price action that isn't great at times, it's just a matter of time. If you just PV this kind of behavioral response function over time versus what we know are going to be our challenges going forward, right? The value's just way higher because it's an option on all this stuff. And so anyway.
Love it. Beimnet Abebe from Galaxy Trading. As always, my friend, great to see you.
Thank you.
Bitcoin was on full display last week in Miami Beach. Where I was rolling up to the conference with my friend Nick Carter on his motorcycle. And the video you see is us on the back, and we're rolling up to Bitcoin 2023 because I'm going to do this interview with Thomas Pacchia and Drew Armstrong on the Pubkey Bus, which was a crazy looking graffitied bus sitting on the main convention floor of Bitcoin 2023. And it's a fun interview. You're going to enjoy it. Let's roll it. Welcome to Galaxy Brains on site in Miami. We are on the Pubkey Bus. And I am joined by two good friends of Pubkey fame, Thomas Pacchia and Drew Armstrong, CEO of Cathedra Bitcoin.
President and COO of Cathedra
President and COO of Cathedra Bitcoin, a Bitcoin mining firm. Drew, Thomas, great to see you. Thank you for having me on the Pubkey Bus.
Thank you for being here.
It's amazing. Our viewers can see behind me.
It doesn't have to make sense.
So you were just saying you had a little bit of a wild day, Thomas. Like what were you? So we were out a little bit late last night.
We had a late one. We had a fun one.
We did.
Didn't want it to end.
But now you've been doing a bunch of podcasting and stuff.
Then we did a few. We had Junsith. So Junsith is half of Bitcoin Uncensored, which I think was the first Bitcoin podcast. There were probably other Bitcoin podcasts, but they were the first ones to really like synthesize the culture around like Bitcoin talk. We were talking about Skype. One of the early forums to talk about Bitcoin, I didn't even know this, was on Skype. IRC.
Wow.
We touched on a lot of topics. And then we had a hard right turn, and we interviewed Chris Cyborg, one of the most prolific female fighters, MMA fighters, like 14 years undefeated.
Incredible.
That was incredible. We tried to get one of our partners to arm wrestle her, but that didn't work out. She would have broke his arm.
Oh my gosh! But what is the story behind the bus? I mean, we all know we did a podcast a couple weeks ago, told our audience about Pubkey.
Yeah.
This bus is literally incredible. Did you drive the bus from New York to Miami?
No, we rented it. We were looking for a pontoon boat, but they were giving us prices for a pontoon boat that's actually like on the water in Miami.
Yeah.
We were looking for like a broken one.
You wanted to like, that's funny. Had to roll it up here at the conference.
Like if it's already on wheels, just like wheel it in, and then it'll be the whole like I lost my private keys in a boating accident thing, and then one thing led to another. We found this ridiculous bus that kind of smells like laser tag.
It smells and looks like laser tag.
It does, yeah. And it has this very funny collection of like disconnected 90s memes.
Yeah.
Like lots of
Darth
cassettes.
Vader.
Yeah.
It's very weird. Disjointed.
Very.
Yeah.
Now, and
it's great though.
We do see some nice cassettes prominently featured in the art, which is also something you love to see. Big fans of cassettes.
Have you guys seen anything programming wise at the conference yet? Or this is day, by the way, it's Thursday, so it's like the first 6 hours of general admission for this 2-day thing. But anything that's striking you about the conference this year?
So I guess maybe first answer your question about the programming. I did just see two grown men dressed in children's wizards costumes discussing ordinals and I think we talk a lot about ordinals at a lot of the Pubkey events and Pubkey meetups. And they exist. And I
it's
definitely
very topical.
I agree with sort of the fatalist mindset that Thomas has been proposing, which is we need to figure out if there's a way to use Bitcoin, we should just use it, see if we can break it.
Yep.
And cat's out the bag with ordinals. I increasingly just think that ordinals it's like just a matter of taste. I think ordinals just you have censorship resistant freedom money. You have, I think, what's one of the most important innovations in really the history of humanity in Bitcoin. And we're choosing to make JPEG rocks. Got it. Okay. Now, graffiti, a time-old tradition. Who am I to tell other people what they can and can't do with the block space? But for me, it's a bit tiresome. But I'd say also on the whole, just the conference in general this year, it's way less frothy than 2021, 2022.
Yeah.
You can tell that we're sort of in a bear market here, but it's actually really nice because there are less random shitcoiners pumping their, shilling their bags.
It's still Miami.
It's still Miami.
There's still some of that.
There's still some of the riffraff, but like there's like a reasonable amount of riffraff.
Yeah.
And it's just great seeing all the Bitcoiners that you love.
Yeah.
And to not really, everywhere you turn, you see another just great Bitcoiner. Someone who's like medium post you read in 2020.
Yeah.
And you're just like, wow, you are like I love your whole contribution.
I would say that that's absolutely my impression too, Drew. The Bitcoiners came out for this conference. Yeah. There was some noise on Twitter, mostly around ordinals, right? They're mad. There were some anti-ordinal activist Bitcoiners who are mad at Bitcoin Inc. because Bitcoin Magazine likes ordinals and had proposed boycotting the conference. Well, I don't remember exactly who those people were that said that, but I can tell you I've seen literally hundreds of my favorite Bitcoiners here. It's been awesome. It is smaller. That makes it a lot. Last year, 22, it was like, dude, I think I did 20,000 steps in just during the day at the conference, one of the days.
Yeah.
It's an incredibly massive venue here in Miami that they actually did fill last year, which is crazy. There was like 30,000 people here last year.
And 21 was huge.
21 too, and Wynwood, that was a good one too. It was very hot.
It was hot. That one was actually obscene. That was so large.
Yeah.
And that was
right on the back of COVID.
It was
People were like excited to like.
I think it was
that
the
one, the El Salvador announcement?
Yeah, it was. Yeah, it was. And I think it was also, at the time, it was the largest conference in the world since COVID lockdown.
Wow.
So it had actually been like, it was huge. It was huge.
Yeah.
I agree. The ordinals thing, I think the fatal, that's fine. I think, it is sort of to each his own. I think as long as, not that you can't, but I think when people, if you're going to spend all your time complaining about how they shouldn't be doing it, like that's a waste of your time.
Yeah.
Just like accept it.
I actually don't see a lot of I think that the maxis are complaining, maxis hate ordinals, like babies are dying, like thing is mostly generated from the ordinals crew. And I think it's very effective. It's an amplifier.
Yeah.
But I don't see a lot of, quote unquote, like Bitcoin maxis that are actually like vocally upset about it. Like, so, and if you go to like the tried and true ones, like a Mr. Hodl or somebody like that, there's a little bit of a deeper discussion. Like, if block space has value, it will be used at a certain price. And it's okay for that to be used with inscriptions. And it doesn't matter what the inscription is. These are valid transactions that people are paying for. It's not spam. It's not an attack. They're valid transactions. Yeah. And I think that ordinals are just an overwhelmingly positive development. It's pushing a lot of the transactions to layer 2, Lightning, Liquid, blah, blah, blah. And blocks are full, so miners are happy. Transaction fees go up. This is important stuff.
No, I totally agree. And I think, now I will say, I think the maxis were right to call out the danger initially when it first happened. They're just like, hey, this could have some pretty big ramifications, not all of them positive. But again, cat's out the bag.
Yeah.
And it certainly is, I agree that I think what
are the negative, consequences of ordinals?
You want me to run down some of them?
Yeah,
we had them in our paper.
Let's talk about it.
You wrote a paper about it.
We have a whole list. I mean, I think one of the first ones people said was that you don't want node runners to have to store this data, and it will make it harder to run a node. And so, and when we're like, let's be real, dude. I mean, I can go to Best Buy and get a 2 terabyte hard drive anywhere, right? And then the argument was, well, what about the global south? What about the global south and blah blah blah? Okay,
that's the babies are dying meme.
Yes,
from
it
Roger
is.
Ver.
It is. Yeah. Roger Ver, that was so good. It was that, and some people said that, right?
Yeah, for sure.
But it's obviously mitigated by the fact, which they pointed out on stage. But it's prunable. All this data is totally prunable.
Yeah.
Now, technically, with a base like Bitcoin Core implementation, you're gonna have to download it first, and then you can prune it. Mm-hmm. But you can also use or disrespecter or whatever these tools that like Luke Dash Jr. and others are making to not download it in the first place. So again, fear mitigated. The other one that I thought was interesting, but we did some math and just think it's not a real issue, is fungibility.
A quick note on that. The first two are non-technical issues.
Yeah. Right.
So those are
Bitcoin works fine.
Right.
It's just like, do the right people that we want to be using Bitcoin, can they?
Right. And then what's the next one?
So fungibility was interesting because they said, well, we want 1 BTC to equal 1 BTC. We don't be like encumbering a SAT with like a bunch of external to the protocol value, right? We want so it's more about the asset BTC, right? But each
would it be
ordinal,
encumbered, though?
So each ordinal is 1 SAT with 9,999 SATs attached to it for postage. So basically, for every inscribed ordinal, it's 10,000 SATs are basically now associated with this NFT, if it is an NFT, right? So now you got 10,000 SATs per ordinal. But if you do the math, like with 500 million inscriptions would only encumber like 50,000 Bitcoin. There's 19.2 million of them, right? Like, so even under the most aggressive growth scenarios we came up with for ordinals, like it's 0.05% of the supply that would even be tainted if you viewed it that way.
Yeah. It does do. It is, I think, a little. It is interesting though, where basically, if you take ordinals to the logical extreme. You basically then each SAT has, call it like the values, like the max of whatever the inscription is that's associated with it, or just 1 SAT. And I think that is like the fungibility thing. I think is definitely, I can see that being a concern. I think the reality is, in my view, Bitcoin, the use of censorship-resistant money and like sound money will be the dominant use case in
For
the
sure.
end, or what is the most important use case.
Agreed.
But I mean, I think the other risk, and this is, I know, there's already been all this FUD over the years about like things like child pornography and other illicit content. But I think when you have nodes actually potentially storing that because it's inscribed, I do think that, for me, it just increases the regulatory attack surface.
Yeah,
and I think that is what really concerned me from the jump. And I think that's what some of the maxis did a great job.
Well, that's kind of interesting because that's not what most of the people are. That's not about the token part, the ordinal part, the fungibility question. You're actually talking about the inscribed data being a risk.
The inscribed data, which if you're running a full node, you have the inscribed data on your SSD. Is the U.S. government going to basically say, oh, well, now you're actually, you're storing this like child pornography, distributing this.
Well, maybe not even in the U.S. Maybe imagine just an even much more authoritarian country. You could definitely be at risk.
And now, actually, and I think this is really, it highlights a very interesting kind of broader point, too, which is just, so, okay, a regulator could say that, and as we all know, no country can ban Bitcoin. They can just ban themselves from Bitcoin. But effectively, it kind of highlights just the asymmetry of decentralized technologies like, the internet, like Bitcoin,
right? Where
there's just like no way you can actually prevent that, and like the technology is a very robust organism in Bitcoin. It's very robust, and it will survive,
right?
And so it kind of just shows how traditional legal structures are just ill-equipped to deal with a technology like this. Just like you can't control the internet, you can't control Bitcoin. Now some might try, and so it might be bad for some, call it like mainstream adoption if different states try to go after it for this. But that I think for me is the real danger.
Yeah, I think that's a great point.
We talked about this at Pubkey a little bit. It is a two-edged sword, right? So in a way, inscriptions, some of the capabilities that Taproot enabled, does NFTs better than other chains, right? Where there's a link in a smart contract that points to a database that can be like centralized, controlled, and it's like a different thing. Yeah, exactly. For Bitcoin inscriptions, you're actually like downloading the inscription data.
Yeah.
Right? So it's deeply problematic for certain types of content.
Right.
It's also very empowering. Like you can think about it as a notary service. Like this is time stamping on the Bitcoin blockchain.
It's funny, you know what they call it in crypto blockchain land. We're talking about data availability layer. We now have an incredibly robust amount of blob space, which is, I'm using the Ethereum terms, which I think is actually a really funny thing about this.
It's funny to listen to the Blue Matt talk about MEV on Bitcoin.
That's what I was going to bring up, by the way. Yours was more interesting, but I was saying another good argument against is that any types, it's not just inscriptions, any type of like external protocol operations that happen on the consensus layer open up MEV opportunities. And there already are some major ones from inscriptions. But if we even go a step further with like, if we start seeing roll-ups, I want like better L2s. I like the L2s we have. I want additional ones. The layered scaling community broadly in crypto has made a lot of progress since state channels were invented. Right? There are other things. I love sovereign rollups. There's other things I would like, but those will also add a lot of MEV opportunities into Bitcoin. And that is a risk. And I think Eric Wall actually on stage was very correct earlier when he said, guys, there's going to be MEV on Bitcoin and you're like 6 years behind trying to figure out how to mitigate it. The Ethereum community has been actively working on mitigations for years, and Bitcoiners barely understand what it is.
The mitigation now is just an auction, right, for the stakeholders.
Yeah, but basically, well, it's,
I think Ethereum
the mitigation is
failed this test miserably.
It may have, but still they've gone down all the paths already, we haven't. So
but they all end at the same spot.
I'm critical. No, there's been improvements. There are improvements. I'm not going to say it's gotten worse. I'm not going to say that.
I think Eric was also just being particularly pedantic on stage, but he did make some good points.
Yeah, well, and also to your point, you were saying about whether some maxis are actually that angry, vocal. 100% Udi and Eric are intentionally trolling. They're drumming up.
For sure.
Yeah. They're intentionally drumming up the opposition.
It's a good megaphone.
Yeah.
Because it speaks to...
I have to say, it is pretty funny, too. They're like edgelording, basically. It's
the broader crypto audience really loves that stuff.
Yeah.
No, they love it because they give them, this this tribal conflict. But they've totally made a pantomime villain out of the maxis, right? Where, the maxis, I don't think any maxis really I think again it just comes down to being in poor taste, effectively.
Yeah, it is.
But I think
it's like that Musk interview with BBC where it's just give me one example, show me, who is raging and crying over ordinals? Show me one example.
Yeah, it's not many. You're right. And we were out with all of our good Bitcoiner friends, and basically this topic didn't come up once. Nobody really cares, as far as I can tell.
Look, there are good topics to dive into.
Yeah, it's interesting.
I don't really see the tears.
And now, to engage in good faith, I will also say going back to when I got into Bitcoin in like 2017, right? Like during I was a child of that bull market.
Yeah.
And it's I do remember 2018, 2019 when I'm now a maxi. I'm talking to my normie friends, and my normie friends are talking about a smart contract platform, a world computer.
Yeah.
And I'm basically trying to combat those. And I remember one of the talking points that I gave at the time. Of course, my understanding was not as like nearly as deep as it is now, but I was like, oh, eventually that's all going to be built on Bitcoin, because if you really need decentralization, it's going to be built on Bitcoin. Yeah. And now I think this is a great first example of, like Lightning was a great example of, oh, if you need scalable payments, you just do that on Bitcoin. Now NFTs, if you really, I'm not sure why you ever really need the NFT to be decentralized, but you copy paste. But
I like
anyway,
digital collectibles.
Digital collectibles, sure.
Milady.
And then, but like now it's sort of it's like the pressing a red button moment where it's just like everything's eventually going to be built on Bitcoin. Like, no, it's a dumb money protocol.
Right.
And like, so I think there's like maybe some cognitive dissonance there.
Yeah.
Especially now that it's like here, but.
Well, was the OG concept, right? Everything, all the altcoins are test nets for Bitcoin was the concept. And this is, Pete Rizzo has a really good way of thinking about this, which is monetary maximalists, which is sort of like the Bitcoin sound money. That's like kind of the dominant Bitcoin culture of the last few years. But then he calls them platform maximalists, which used to be like, yes, I like BTC the asset, but actually I like Bitcoin as a platform upon which to build, and that has obviously fallen by the wayside for years, right? This is opening that interesting culture clash again.
No, I think it's true, and I think I've actually been thinking about this in terms of evolution of Bitcoin businesses and like businesses in Bitcoin, and I think maybe like, generation one is like a business that's like directly like serving Bitcoin or helping make an exchange, making Bitcoin more easier to use, or maybe like some sort of custody business, something like that. Generation two potentially is using the Bitcoin network as a tool, and it's building a business around Bitcoin the network, so like Strike or something like that.
Yep.
And then I wonder if like basically the third generation of Bitcoin business is really, or the third iteration of it is actually something that Steve Barber's been doing for a while, which is just, you're just like a business. Like, I mean, Steve's business does actually touch Bitcoin,
right?
But we're talking about normal businesses that just hodl a portion of their retained earnings in Bitcoin.
Yeah, they just hold Bitcoin or buy it, or
Like, not every business is going to be a Bitcoin business.
I actually love this. Somebody was asking someone on Twitter a while ago, randomly, like, hey, I really like Bitcoin. How do I want to work on it full time? They were like, and then somebody replied, they were like, well, what do you do now? And he's like, well, I'm a doctor. And they're like, dude, just be a doctor who loves Bitcoin. Just like buy Bitcoin and be a doctor. You don't have to like work in Bitcoin necessarily.
Why can't you be normal?
Yeah, well, why can't we be normal? I think everyone knows we're not normal. Look where we're sitting right now, Thomas.
but like along these lines too, and I was joking with a friend who's been building a Bitcoin company since 2018, and as I was talking to her, we basically both were just like, if we kept some like cushy fiat job and just stacked Bitcoin,
right,
and never really felt a compulsion to go and work and contribute to the space, maybe we actually would end up with some more Bitcoin than we have right now.
It is brutal.
You don't like to do that calculus, but like it is. You can understand why people, like this doctors, like, I feel this compulsion to contribute to Bitcoin.
I get it. We all feel it too.
That's why we're here.
That's exactly.
But at the same time, world still need doctors.
And it's like, dude, you might already have a good job. That sounds like a pretty doctor. It sounds like a pretty good job.
But there's something really amazing embedded in that. Like, the Bitcoin businesses, the startups are really difficult.
Yeah.
Right?
Oh,
like,
yeah.
They've been like crushing.
Oh, yeah.
But you still have people that are really excited, really passionate about the industry. It's like, how can I dive into this? And it's just like, you want to dive into this?
Into that?
This asset pool?
Yeah. No, it's true. We talked about this a lot. We do a lot of, our listeners will know, you guys both know too, we cover venture in crypto at Galaxy Research. And last year, the end of last year, last Bitcoin conference, I did a panel. I moderated a panel with our friend Christopher Calicott from TVP, and Grant Gillum from 1031, and two others. I can't remember the whole panel, but it was about Bitcoin VC. And one of the things I said was $30 billion was invested in 2021 by venture capitalists in crypto startups. And by my count, 99.5% of it went to non-Bitcoin companies.
That's a shame.
Right? It is a shame, but it's also hard to build a scalable, because think about which companies...
VCs want tokens.
Well, not just that, but think about what they do. But think about what businesses actually have been profitable in this space. Yeah. They're almost all exchanges, basically, historically. And like a Bitcoin-only exchange is not nearly as profitable a business as a multi-asset exchange, and so it's always been hard.
Actually, it's funny, going back to even my days at Galaxy, when it was doing on the venture team and the investment banking team back in 2019. I just joined out of investment banking.
Yeah.
And we were basically mapping out the coverage universe for like crypto, right?
Yeah,
what are all the companies? And at the time, we were all just like, okay, or as AJ and I are like chatting about it, and just like the only two businesses that have ever made money in crypto, like reliably, are miners and exchanges.
Yes.
Now, miners also might, a lot of times they
tough
lose a lot of
business,
money.
but yeah,
tough business. But like those are the only two like cash flow.
Also the
generating
mining
businesses.
machine manufacturers,
True.
like Bitmain, MicroBT, yeah.
Butterfly Labs.
Butterfly, of course. Shout out.
Shout out.
But I mean, yeah. So I think, I think you're absolutely right that the majority of VCs are not, majority of the venture capital is not going to Bitcoin companies. Now, I think one thing we kind of also need to just be aware of is how interest rates are now 5% higher.
Oh, yeah.
Now than they were like a year and a half
all
ago.
VCs crushed this year. It's down a lot. I mean, actually, I've been impressed that the blockchain VC sector is actually doing okay. But it's down huge. I mean, I think we're on track for maybe 10 billion allocated. That'll be a third of each of the last 2 years. So,
but I think the reality is that I don't think every business needs to be this like hyper scale, or like this hyper growth like venture startup. Like, time was for most of human history.
Yeah.
You didn't go from being like from inception to
scaling to 1,000 people.
Yes, or to being like a unicorn within like 5 years.
Yeah.
Like, most of the time, like capital
10x
actually.
or don't talk to me.
Yeah, exactly. Like it needs to return the whole fund, or I don't want to talk.
Right.
And I think that the reality is that for most of human history, it's been about accumulating capital at much lower growth rates.
Yeah, well, and you could borrow from a bank instead of raising growth equity capital or whatever.
Yeah.
I agree.
And the issue is that all that the low interest rate VC landscape has just also led to some like perverse incentives where it's like growth at all costs.
100%.
And this effectively happened to BlockFi, right? Where like they're just so focused on growth.
And it's absolutely high time preference behavior. Also,
Yes.
venture. No, I agree. That is a product of low interest rates. Another comment I wanted to make too on this Bitcoin versus like crypto company thing. I've talked to a lot of allocators over the years, big investors, right? And they say, we try to get them involved in liquid, like, own some Bitcoin actually on your balance sheet or whatever, like buy the asset, right?
Blockstream liquid?
No, I mean like liquid versus illiquid investment, right? Investing, right? So like,
own the asset.
Yeah, like own the asset. Don't not own the asset.
Yeah.
Like, I mean, do whatever. But what we would often find, and it's improved a lot since then. But like, partly because custody is hard. Oh, they're not allowed to hold a weird asset in their vehicle or whatever, right?
Some funds can only hold securities.
Yeah. So what would often happen is they said, you know what? I think we're just gonna do venture because we know venture. All these big funds, they have venture, right?
Yep.
So I'm like, okay, that's fine. But back to the point I made earlier, you need to know that you're actually short Bitcoin in that spot.
Yes.
It's totally fine. You want to do crypto VC? Know that that is structurally underweight Bitcoin. Like, it's fine, but if that's your strategy, all power to you. But know that you are actively trading it that way. So buy some Bitcoin, then do your crypto VC if you want to. If you want to, you know what I mean? Otherwise, you're structurally underweight.
And it's like the siren song of Bitcoin denominated returns, where like I think it's something people talk about a lot in mining. But the same logic holds true. And a lot of times people are focused on say gross margins in mining, right? Where it's like I want 1 cent power. But if it takes you like 5 years to build out a site with 1 cent power, then you're short Bitcoin for 5 years, and you've already gone through a halving, and network hash rate's probably way higher. So
yeah.
I think you're totally right. Where you actually, rule number 1, you need to know the game you're playing.
Love it. All right, let's wrap it up. But what else?
The VCs love the tokens, right?
They
it's
do.
the liquidity.
Yeah. Well, they kind of invented the token game.
And it makes sense. It makes sense for the model.
But the irony is that if the ICO hadn't been deemed illegal, that ICO being deemed like an illegal securities offering for the mass, all of them, the concept of it by the SEC being an illegal securities offering, right?
Yeah.
Like the public ICO, that led all the venture funds to do private like simple agreements for future tokens, right? Which is
SAFT.
Which means that if you actually go and look at the distributions, the decentralization of all the altcoins over the years, everything that did the public ICO is significantly more decentralized than all the newer protocols. So like ETH and Cardano are like very decentralized from an ownership standpoint of the asset because they sold it to like a bunch of people. When you go and look at the newer ones, I'm telling you, but by comparison, I have the data for this.
By comparison.
That's what I'm saying. By comparison. The irony though is to protect investors, the SEC created a situation where like 2 funds own 50% of major protocols now. So it's a very, like, again, it's the attempt to protect consumers actually ultimately, in my view, harming them. But hold on,
Has Joe Lubin ever disclosed how much Ethereum he owns?
I'm not aware of that he has, no.
I think that he has actually actively avoided answering that question many times.
Last year at Consensus, my teammate, Christine Kim, really pinned him, and he refused to answer.
Yeah.
What are you guys excited for?
Good on Christine for...
I know, she pressed him.
She actually, like, went after that.
She did. She pressed him. What are you guys excited for the rest of Miami here? And anything in particular, or just...
It's just so nice to be in Miami. You just sweat it all out.
Hey, every morning, go for a run on the beach, maybe get a quick lift in, jump in the ocean, have a coffee, have an American spirit. It's really not such a bad life. But
honestly, one of the reasons why I take exception to the Bitcoin maxi narrative is I like being here. I like being around other Bitcoiners.
Yeah.
Like, it's a great community. It's a great culture, and it's like very badly like represented with this narrative.
You mean against the like maligning of Bitcoin maximalism as this big bad thing.
They're just people.
I know.
People that are into a thing, and they're excited to be here, and it's fun to be around people that are passionate and excited to be around other people that are passionate about this stuff. So conference, Pubkey, Bitcoin Park, Bitcoin Commons, like
these things are awesome.
Third places are important.
Third places, I love that.
Places.
But I mean, so I'd say, as someone who identifies as a Bitcoin maximalist, I also think that part of the thing, it's like this pantomime film where it's, maxis are so toxic, and the thing is, like, there are some people who are clearly the inspiration for that meme, and clearly, there's like a short list of folks when someone says toxic Bitcoin maximalist, and there's like a certain short list of folks that come to mind, but some of these guys were intellectual giants for Bitcoin. You think about like Pierre writing the siren song of crypto VC in like what was it, 2015?
Yep.
Like, the Bitcoin maximalists, I think, are intellectual juggernauts and deserve like respect and reverence, and like really just contributed so much to the discourse, and so much of the stuff that was written in like the early days or before I got into Bitcoin is still just evergreen content. And I'm always sympathetic to the view that like I've noticed this during NFT NYC. Anytime you talk to a shitcoiner, it's clear that they don't really, like, you ask why does your token need to exist, and it's clear they don't really understand Bitcoin, and they don't really understand like what even like they're doing. And I think also part of it too is just this weird form of mimetic desire where it's like, I missed the boat on Bitcoin, so I want to be part of the trendy new thing that's going to be the next Bitcoin. And it's just like, all right,
Pepe coin.
Yeah, exactly. It's just like, chill the fuck out, stop being so insecure, just realize that Bitcoin's larger than you. And so I agree with Thomas. I love spending time with Bitcoiners down here in Miami. I'm going to plug my panel, Bitcoin's Energy, tomorrow at 1:30 p.m. on the mining stage with Jeff Booth and Steve Barber.
Just to be clear, it will have already happened by the time anyone listens to this podcast, so let's just go ahead and congratulate you for a great panel.
That was a great panel.
Great job, dude.
You really held your own.
I try.
I can't wait to see that. That's 1:30, you said?
1:30
Sick.
p.m.
Dude, RFK was here earlier. RFK Jr., he was incredible. For our audience, if you like Bitcoin, and you're wondering which politicians are running that have good stuff to say about Bitcoin, Robert F. Kennedy Jr. is someone you should look at.
Oh, Vivek is here as well.
Oh, yeah. That interview could have gone on and on. I think we were hanging out on that bus for like 2 hours, but for the sake of our listeners, I've edited it down a little bit. But thank you to Thomas and Drew for that awesome time on the Pubkey Bus at Bitcoin 2023 Miami. Hey, thank you to the organizers of that conference, Bitcoin Magazine. I think it was my favorite one yet. I've been going to these conferences since Bitcoin 2019 in San Francisco, and really looking forward to Bitcoin 2024 next summer in Nashville. As always, also, thank you to our good friend Beimnet Abebe from Galaxy Trading for his insights on markets and macro. Hey, and we're going to play you out with a clip from me on the main stage at Bitcoin 2023, talking about credit and lending markets in Bitcoin. And after that clip, hey, thanks for listening to Galaxy Brains. We will see you next week.
I want to hand this over to Alex. Alex, with BlockFi, and then you can cover some other companies as well. With BlockFi, was this negligence, just a business mistake, or something more insidious?
I think not just BlockFi, but at several of these lenders, there were egregious lacks of risk management. Risk management not actually even being done, not only being bad at it. In fact, I would go so far as to say at some of these shops, perhaps bordering on criminal negligence, you absolutely can manage asset liability matching. You can manage maturity and duration risk. It is not a foregone conclusion that a lending book is going to blow up, right? In fact, that rarely happens if adults are managing risk. But if we look across the space, what do we see? We see BlockFi, dead. Celsius, dead. Genesis, dead. All of these firms, and we could talk specifics, but I think it's, if you just read crypto news, you know a lot of them, egregiously used like customer deposits in ways that were not supposed to be used.
Like, give us an example of, so they're using customer deposits and they're not just lending it out. What were they doing with it?
Yeah, I mean, in some cases they were operating like hedge funds. They were investing the deposits. They were doing stuff on chain, right? Celsius, pretty famous, came out in their bankruptcy. They'd given like $1 billion to a DeFi trader to just trade in DeFi, right? That isn't lending, right? That's not managing a lending book. That's running a hedge fund. And that isn't what most of them told their clients they were going to be doing. But it is what we do in lending is you have over-collateralized loans, you have creditworthy counterparties, you manage the assets directly. It's like having a short locate in equities. You know exactly the asset you owe the borrower, and you know how to get it, and you have the funds to get it, or you hold it, right? You don't like, ooh, maybe there's a pile of money. If we need it, we'll go find something to pay them out. And that's what some of these companies did. It's just they were not adults in the room. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.